Think getting a mortgage in Switzerland as a non-resident is impossible, then think again. In this video, we sit down with Savannah from Ennis Global to reveal how you can secure Swiss financing with interest rates as low as 1 to 2%. We're breaking down the difference between retail and private banking, how to achieve up to 100% loan-to-value financing, and the specific solutions available to US clients that usually get turned away by local banks. Whether you're looking for a holiday home or a multi-million franc investment, watch this video before you make an offer. Luckily, today we're joined by Savannah, who is our expert Swiss mortgage broker. Hi, Savannah, how are you?
I'm good, thanks. Thanks for having me, Jay.
Thank you very much for joining us. Would you like to tell us a bit about yourself and Ennis and how you can help Snow-only clients?
Yeah, absolutely. So Ennis was started about 19 years ago now. We specialize in whole of market financing for high net worth, complex or international clients. Within that, we have a UK mortgage broking team, a international mortgage broking team, which is where I sit. We specialize in Switzerland, France, Spain, Portugal, and Italy. We have a securities-backed lending team for people lending against their stocks, shares, and crypto. We have a corporate financing team for UK limited companies, commercial and development financing for UK property as well, and luxury asset-backed financing. So any movable assets, art, cars, yachts, private jets, wine. So generally, we're set up to be able to assist, not only high net worth, but maybe people who have assets overseas or multiple income streams to be able to finance any and all of their assets. And we can look at sort of different ways. We can be quite holistic with the way that we assist people. Obviously, my specialty is international mortgages, which is where Switzerland comes into this.
Nice, perfect. Sounds like you guys can help a lot of our clients in different sort of financial backgrounds as well, not just your traditional finance, which is great because we do have, a lot of clients that have other assets and not just, cash or liquidity. So that's great to know. So talking about, let's go on to Swiss mortgages. What would you say the lending criteria is for, most of our clients are non-residents. What would you say the lending criteria is for Switzerland?
So I'd say the things that the Swiss banks will look at most, there's two different types of banks and two different types of mortgages when we're talking about Switzerland. So we have retail banking, which is your local banks that you would see, on the high street, and we have private banks. Retail banks they generally will look at debt to income calculations. So instead of an income multiple like you might see in the UK, they'll use between 33 and 40% debt to income ratio, and that is all of the annual income. Say 40% of that can be allocated to debt payments. So that's anything that you're paying currently, any mortgage you currently have, credit cards, car loans. Even in some cases, they'll look at school fees and rental payments as well. And whatever's remaining can be allocated to your new mortgage. It also, in Switzerland, despite the rates being, between 1 and 2% most of the time, they will always model it as if you're paying 5%, which can reduce borrowing for people. But obviously, the rates are really cheap because they're quite conservative. Other things they'll look at that's important to note is over the age of 60, generally retail banks will only wanting to be looking at your pension income or your retirement income. So even if you are very successful currently, you plan on working for another 10 years at least, they're going to start looking at, okay, but what's your income going to be like in 15 years? Or what if you start working in 2 years' time because you're eligible for your pension? So that's important to note. On the private banking side, you can be a lot more flexible. They can generally look at your wider assets. They can be a bit more flexible with looking at your, income situation. If you keep a lot of retained profits in your businesses, which a lot of our clients do, then the flip side to that is that generally they'll ask for assets under management or an investment to be made with the bank as well. So they have that safety. Obviously, they feel more comfortable being flexible about revenue and assets and age because you might be placing, say, 1 to 2 million with them at a minimum. So they know that they could cash out at any time, essentially. Other than that, the loan to value you're generally looking at is between 60 to 80% for non-residents. 80 is a stretch, but it can be done. And then with private banks, you can go up to 100% financing. It's not something that is like as common in Switzerland as France, for instance, but it's definitely possible and it's there if the client's really interested in that. And then interest only, you can have retail banks. Sometimes they'll offer interest only, sometimes they'll offer part and part. For private banks, interest only is generally the standard.
Okay. Perfect. Good to know all the different ways of that you can lend money to clients. I guess that leads on to the next question. We deal with clients all over the spectrum. You know, we've got clients buying for anywhere from 250,000 all the way up to multiple millions. What would you say is the lowest amount that you can borrow on, lend on, and subsequently, what would the highest be as well?
For non-residents, the banks, I mean, technically they'll start loans at like 30,000. But for banks to make it worth their while for non-residents, because it's a bit of extra paperwork for them. Also, it's not as cost effective because they know that you're probably not then using their other banking resources if you don't live in Switzerland. So generally they'll start their minimums at 100 to 150,000 loan amount. So then you'd be looking at sort of like 250,000 to 300,000 minimum purchase price. But as for maximum, the sky's the limit. I mean, I've looked at like 50 million purchases, and there's banks willing to lend 100% financing on that. So you can really go like right up the other end.
Okay, cool. And what about you guys as a brokerage? You the same? Like you don't have a minimum lending criteria?
Generally, we say 250,000. However, we can be flexible. Obviously, we work across multiple sectors. So if this loan is, 250 or 150,000, but you have other mortgages that might be coming up in the future, or you think about buying a yacht and you're going to need financing on that, we can look at it as a whole picture. Obviously, like it's not a hard rule.
Okay, perfect. And you might have answered this already previously, but loan to value, I know you're saying between 60, 80%, but obviously up to 100%.
Yeah.
Minimum deposit amount, again, depending on what you're trying to what kind of loan you're trying to get, right? I presume.
Yeah, it also depends on the complexity of yourself as a client. For clients who are seen as super vanilla, so if you've been employed by the same company for 3 years, your income's always been the same, you have very low debt, and you're not from a country that would the banks would classify as high risk, so you don't need extra due diligence done, then the LTV will be higher because the bank essentially has to do less work, and they feel safer. If you have 5 different companies that and you're paying yourself a really minimal salary to keep your tax down and keeping all your money and investing through your businesses, then that's a lot more work for the banks as a start. But then also they see that as riskier. Or if you've gone between being employed and self-employed recently, they don't like that either. So then they might reduce the LTV and make you sort of put a bit more equity in to feel safe.
Yeah, makes sense. So I guess it's a case by case basis, right? The
Yeah.
best thing clients to do is actually reach out, speak to you, and then you can kind of go
Yeah.
from there. Probably. Okay, cool. And you mentioned there something about the countries, non-restricted countries. Can you just tell us a bit more about which countries those are? Like, obviously, we get a lot of different clients on site, and some of them sometimes may come from countries that we can't help. So it'd be good to give us a list of which countries you can't help. That'd be great.
Yeah, I mean, there's not an exact list. And on the private banking side, there's again a lot more options because those banks are sort of fit out to be able to help potentially more high risk clients. Obviously, if you live in Russia, you're probably not going to be able to get a mortgage, I'm afraid. But other than that, like Europe is generally pretty easy. The US is the other one that I think people are surprised at because it's not obviously not classified as a high risk country. However, the US itself has a lot of restrictions in place for what their citizens can do with their money outside of the US in terms of investing, in terms of regulations and that need to be abided by and sent back to the US for reporting. And so there's actually a lot of banks who don't want to deal with US clients because even if they're a small bank or a large bank, it takes a lot of extra manpower for them to be able to assist US clients. So especially if they also want to invest alongside their mortgage or they want to hold cash alongside their mortgage. In Switzerland, there's a lot of banks who won't do that. So products can be more limited for US clients. And I think they tend to find that it's a bit of a surprise because obviously they're not high risk. They're not sanctioned or anything. But yeah, US clients always can be a tricky one. There's absolutely options out there for them, but they're sort of a bit more bespoke with what we can do.
Okay, cool. That's really good to know because obviously we get a lot of traffic on site from the US. So really important for US clients to know if they're trying to get a Swiss mortgage that it might be a bit more difficult to do. Nice. So how let's say someone gets in touch with you today, how long, I mean, again, it's probably a case by case basis, but a rough time scale of how long it takes to get a Swiss mortgage would be beneficial to know.
Yeah, I mean, yeah, you're right. It is case by case, and it also depends on obviously not only the complexity of the file,
Mhm.
but if the property's been found yet. I speak to a lot of clients before they've found a property, before they've even gone searching, and so they just want to get an idea of what could they get in terms of a mortgage. There's a lot of banks who don't really want to engage a lot until they know know what the property is that the clients are going for, so they can do sort of an internal valuation and assessment of it. But yeah, like likewise, again, if you have 5 businesses, then that's going to take a little bit longer. But in general, so if they come speak to me, we can get terms within 3 to 5 days, depending on the complexity, depending on the time of year as well. Then we can onboard you with us. We can then submit the formal application that goes to credit. Between credit and formal mortgage offer, you're looking at probably a month. And then from there, it's sort of in the hands of the notary to formalize the deed and complete the transaction. So if we were working at speed with really like non-complex clients, you're generally looking at about 6 weeks.
Okay.
And obviously it can be faster if we're going with a private bank and it needs to be done tomorrow when the client's super organized, but it also can be longer if, maybe they flag that the property is, not zoned correctly, which can happen with, I've seen it in quite a few ski properties actually, where it's been zoned as like commercial, but the client's buying it as a residential property, and so it's overcomable, but it can just throw a bit of a spanner in the works sometimes.
Okay, that's good to know. When's the ideal time for a client to actually speak to you? Because I know you was just mentioning there about sometimes banks want to know what property the client is actually going to buy before lending, I guess. So what would you say the best time is for a client to get in
Yeah.
touch?
I would always say the best time to get in touch and have an initial conversation is when you're starting to think about buying a property in Switzerland, just so you can understand what generally your financing options are going to look like, how much equity you're going to need to bring, what the banks are going to look like, what documents they're going to require, because Swiss banks also are very document heavy. They're going to request a lot from you.
Yeah.
But then you can also wait until you found the property and then wait until right before you want to put an offer in, because then the bank can tell you a pretty quick answer as to like, no, we don't want to lend on that sort of property. Or I've had ones where they were like, oh no, the tiles look a bit tatty in this room, we don't think it's for us. Like, they can be very particular about
Okay.
the properties that they will lend on. So pre-qualification is a little bit harder in Switzerland than it is in France, because it is so property dependent. They will ask for lots of documentation about the property as well. They want the floor plans, they want the energy ratings, they want to know it all before essentially offering the mortgage, and that can also change the loan to value as well. I've seen cases where the clients can actually borrow a lot more, but then they're unsure about the exact town or the location of the property, so they're below with the LTV as well.
Okay.
So yeah, I would say before you put an offer in on a property, but potentially you've got some properties in mind, that's always good.
Okay, cool. Perfect. And I guess speak to us a little bit about rates. What
Mhm.
what what are the rates looking like at the moment? And I know you talked
Yeah.
about the process a little bit before, but again, if there's anything else that you'd like to add on the actual process, then please
Yeah.
let us know.
So rates for retail banks, you generally get a choice between fixed or variable. For
Mhm.
fixed, you're looking at, say you're going to fix for 1 year, it'd be about 1%, and you can go all the way up to a 10-year fix. And a 10-year fix might be between 1.8 and 2%, and then they'll just go up every year gradually with that. The longer you fix, the higher the rate will be, but
Yeah.
generally between 1 and 2%. For variable, again, it's SARON plus a margin, and that margin will, the longer you want to fix the margin for, the higher it will be. They can generally start a little bit cheaper for variable, so it might start at 1.9 and go up to 1.7.
Mhm.
For private banks, they'll almost always offer a variable rate, SARON plus a margin, and they can be a little bit cheaper. It depends on different factors. Sometimes they can come in more expensive, but if you're putting significant assets with the bank, or they see you as a really valuable client, with future future opportunities to work together with the bank, maybe you're going to do mortgages in other countries, maybe you're going to be investing heavily, then the lowest I've seen is about 0.7 over Saron, which works out to be almost 0.7 altogether. So cheap. um, and yeah, and then in terms of process, obviously, speak to me. We get indicative terms. We submit an application with the bank that we like, we like the best, that the client feels the most comfortable with.
Mhm.
It goes to credit and underwriting. Then they do the valuation of the property, which For some banks will be internal. If they know the market well, they can just essentially do like an online valuation themselves. Or sometimes they'll need an external valuation as well. It also depends on the value, on the overall value of the property. If we're looking at sort of 2-3 million plus, they'll almost always get an external valuation done. Which could delay the process depending on when the value is available. Again, depending on the time of year. Over Christmas, obviously, it's a lot slower. Then once the values come back all right, that's when you get the formal mortgage offer. It then goes to the notary, and the notary finalizes the deed and puts the mortgage in place, essentially.
Okay, amazing. Sounds pretty straightforward, which is good. Nice. So I'm going to do something new now, which I haven't actually done before, which is a quick fire round. So you're going to be my guinea pig, if that's all right.
Okay, go for it.
So I'm going to ask you some really basic questions, and you have to answer them as simple and as quickly as possible, if that's okay. So let's give it a go. Biggest myth regarding Swiss mortgages?
That non-residents can't get financing.
Okay, good. So that's a myth buster right there, straight from the off. As well. What's the quickest turnaround you've ever done for a Swiss mortgage?
4 weeks.
Wow, that's super quick. Nice. It's good to know, actually, because sometimes we do find we obviously try and tell clients to speak to our connections as soon as possible, but in some cases clients like to do it the opposite way around, find the property first, and then they're like, oh, there's only 1 or 2 of these left, we really need a mortgage like ASAP. So it's good that you guys can turn something around that quickly, which is great. How easy is it to get a Swiss mortgage?
It depends on the complexity of the file, I would say.
Nice diplomatic answer there. I like that. And why should clients consider getting a Swiss mortgage?
Because the rates are generally pretty good. So if you have the cash, then you can essentially like offset the interest that you're paying by potentially investing that, even with a low investment. This is not a short answer, I'm sorry. Even like a 5% investment would be offsetting the interest. So you can obviously speak to an investment advisor, but that's what a lot of my clients do.
Nice. I like that one. That's cool. And yeah, before we go, last thing, if you were to take one thing from this video from today, then what would it be?
Speak to us early, and you'll have the most options available to you.
Amazing. Perfect. All right, cool. Well, thank you very much for your time. Anyone that's 17 minutes in now, so we really appreciate you staying for this long. If you like the video and you want to help us generate more like this, then please hit the like and subscribe button, all that YouTube jazz, which I find very awkward of doing, but it does help. And yeah, hopefully we can bring some more expert speakers like Savannah to you in the near future. So thank you very much for your time, Savannah. Thank you very much for your time and for your answers. Really appreciate you jumping on the channel, and hopefully we'll have you back on soon.
Fantastic. Thanks so much for having me, Jay.